If you don't understand entry, exit, stop loss, and take profit, that means you are not trading, you are gambling, because you must understand where to enter, where to exit, where to place your stop loss, and where to take profits. See, without those four things, trading becomes poor gambling. And in this video, I'm going to explain what is entry, what is exit, stop loss, and take profits. So let's start with the number one, which is the entry. So what is an entry? An entry is simply a point where you decide to open a trade. It can either be a sell or it can be a buy. But a point where you decide to enter a trade, that is your entry. So now let's take Euro USD, Euro USD for example. Let's say we have Euro USD and the price of Euro USD was 1.100. So that is the actual entry where you want to enter a trade. So you want to buy at this particular price level, which means you are expecting price to go up. So you see this particular number that we have here, that is going to be your entry, where you will enter a market from. And if price now move from this particular level, so now let's also take a look at a sell. Let's say you want to sell, you don't want to buy, you want to sell, you are expecting the price to go down. Maybe you have something like this and you are expecting price to maybe come here and start selling. So at this particular level here where you want to sell from, that is going to be your entry for the sell. So that is what entry means. Any point in time in the market where you decide to enter a buy or you want to enter a sell, so that is your entry point. So, and your entry really matter. It's really matter because a good entry can reduce your risk and increase your profit potential, while bad entry can lead to emotional trading and unnecessary losses. And for the exits, an exit is a point or a price level where you decide to close your trade. It can either be in profits or it can be in loss. That is what an exit is. Maybe you already enter a buy, and when price move to this upside here, you decide to close it. That is an exit. Or maybe maybe you buy here and price is already going against you and you decide to close here, that is an exit. So any price level that you close your trade in the market, that is exit. For stop loss is also known as SL. You can see SL or stop loss. So it's the same thing. An SL or a stop loss is a price level where your trade automatically close in loss. You can be in the markets or even if you are not in the market. So, but a price level where your trade is going to close automatically in loss. So let's say for instance now you enter a buy around this region at this line here, you enter a buy at this region, you place a stop loss below here, so which means you are anticipating or expecting a price to continue to go to the upside like this. So but price doesn't go to this upside, so this level that you set your stop loss to, anytime price come here, it's going to close your trade for you automatically, whether you are in the market or you are not in the market. But so far you have your stop loss order placed at that price level, it's going to close it for you instantly. And same thing if you are selling. Let's say you are selling. So if you are selling, so maybe you are selling at this particular point and your expectation was price to continue to the downside like this, but price doesn't go down. The price do something like this and it's later go against you and tap this particular price level, your trade is going to be closed automatically in loss. And so you can think of a stop loss like a seat belt in a car. Though you don't expect accidents, but you wear it for a protection. So your stop loss is what you set to prevent your account from unexpected losses. You know that your stop loss, you already know what you calculated, that okay, maybe you decide to risk $100 on this particular trade and you place your stop loss here. after you've already calculated the size of the position you want to open. So anytime price comes to this particular level at this $100 loss, it's going to close it for you. But if you don't place a stop loss here and price gets here, that means you will lose beyond what you are expecting to lose because you didn't have a stop loss. So it's very, very important for you as a trader to always use stop loss. So, and another reason why stop loss is very, very important for you as a trader is that because without a stop loss, one bad trade can wipe out your whole capital. Maybe you have a $1,000 account, for example, again, but your anticipation was maybe you want to risk just $100, but because you didn't have any stop loss placed, a price just come and it just go against you massively. So one single trade can wipe out your whole account if you don't have a stop loss. So it's very, very important to always place your stop loss. And another big mistake a beginner or maybe a trader that is not well informed can make is that, let's say, even if after you place your stop loss like this and price is coming near against your stop loss level, what most people do is that they don't want to accept the loss. So they will now start moving their stop loss like this, move their stop loss like this until the loss is beyond what they can bear. So, and in that case, it's going to lead to bigger loss than what you even expected to lose. So, and that can also lead to frustration. So, you don't want to do that. Always accept the loss before you even take a trade. Before you execute a trade, always accept the loss. So, that's the reason why it's very, very important to risk what you can afford to lose on a trade. Because if you have already accept the loss before you take it, the emotion is going to be less, though you can be a little bit emotional, but the emotion that is going to be attached to it is not going to be much like when you didn't accept the loss. So it's very, very important for you to always accept the loss before you even enter a trade. So that's will save you from some kind of emotional roller coaster in the market. That's not take us to take profits. So why take profits is just the opposite of stop loss. So we are buying Euro USD at this particular point. So this is your entry point where you entered from. So you already know that this is your stop loss level, and a take profit is a price level, your target that you are expecting that okay, anytime price get to this particular level, that you want to take your profits. So that is the reason why it's called take profit. So once you have your take profit set, your trade is going to be closed automatically. Either you are in the markets or you are not in the market. Same thing if you are selling. See these tools that I'm using is for a sell, and your sell can also be called maybe you are shorts in the markets. If you check here, you see we have a short position while we have but your buy is a long position. When you are buying, you are long in, and when you are selling, you are short in the market. So now you already know that this is your entry. This level here is where you entered from. So you have your take profit sets, you have your stop loss sets. So anytime price comes to your take profits, yeah, your trade is going to be closed automatically. And maybe price can continue going to the downside or maybe even reverse. But your trade is going to be closed once price hits your take profit. Take profit is also very, very important because many traders lose profit because of greed. So take profit can save you from being too greedy, because let's say you have a take profit here, but you didn't set the take profit. But when price now get to this particular level, you might be open for more. That's okay. Maybe you don't want to close and start open for more. And in that case, price can just retrace back, and if you maybe take your if you are at a break even, if you set a break even, or price can just come back to its your stop loss. Why price have already come to your take profits level before, but because you didn't set the take profit or you didn't close your trade when price hits your take profit, So a winning trade can turn to a losing trade. Take profits can also make you to stay more disciplined. You can have a fixed risk to reward. Risk to reward means just what you are risking versus what you are um, making. Maybe you are always anticipating to always make times three of what you are risking. So risk take profit is going to help you to always stick to that. Maybe you always close at that price level. It will make you to stay more disciplined to that rule that you have for yourself. And it can also help you to remove emotion. Maybe you can just place your trade, set your take profit, set your stop loss, and just close your um, trading app so that markets will just do its things. So you won't have to be watching what market is doing and start acting based off what you are feeling. So it can also help you to remove emotion from your trade. So and your profit is going to be locked for you automatically when price get there. So that is all for the entry, exit, stop loss, and take profit.